It's not so good news because the British economy experienced a period of stagnation in the third quarter of 2023. The main reason for the standstill is high inflation, which is much more exacerbated in Great Britain than in many other parts of, for example, the eurozone. The country's gross domestic product, the GDP, remained unchanged compared to the previous quarter, signaling a noticeable slowdown in economic activity. Despite the expectations of experts who had predicted a slight decline, Great Britain was just able to avoid a further decline in GDP. However, this development cannot be viewed as entirely positive. The service sector experienced a slight decline, industrial production largely stagnated, and only the construction sector recorded minimal growth. In contrast, the German economy contracted by 0.1% over the same period, putting the situation in Britain in a larger European context. The high inflation rate, which peaked at 6.7% in September, represents a particular challenge for Great Britain. This value is compared to other large industrial nations, such as the eurozone with an inflation rate of 4.3% or Germany here with 3.8%, particularly high. And British Finance Minister or Chancellor of the Exchequer Jeremy Hunt emphasizes that containing inflation is the key to sustainable economic growth. In view of this high inflation, the British Central Bank has already raised the key interest rates 14 times in a row, reaching a level of 5.25%. That's the highest in 15 years. With this interest rate increase, the central bank is pursuing the goal of curbing inflation. However, the high interest rates also have a dampening effect on the economy as loans for investments become more expensive. This is reflected in the current economic situation. The Bank of England expects only marginal growth of 0.1% for the fourth quarter, and the forecasts for the coming years are also subdued, with stagnation expected in 2024 and a slight growth of 0.25% in 2025. And this situation clearly shows how closely linked economic growth and monetary policy are. While combating inflation is a priority, it also brings with it the challenge of not slowing economic growth too much. The UK therefore faces a difficult task in finding the balance between these two goals. And the UK economy has experienced several significant developments since the 2016 Brexit referendum, marked by both challenges and opportunities, and exacerbating inflation with that. And that's why I put up some overview for you. There is the immediate post-referendum impact that was 2016-2017. The immediate aftermath of the Brexit vote in June 2016 sent shockwaves through the UK economy, triggering financial market turbulence and a subsequent slowdown in economic growth. The pound sterling depreciated sharply against major currencies, reflecting increased uncertainty about the UK's future economic relationship with the EU. And this uncertainty also led to a decline in business investment and consumer spending, contributing to a moderation in GDP growth rates. Then there was uncertainty in the negotiations phase that was 2018-2019. The period from 2018 to 2019 was characterized by protracted negotiations between the UK and the EU over the terms of the UK's withdrawal. And these negotiations created further economic uncertainty, hindering investment decisions and exacerbating trade disruptions. Businesses faced increased costs and delays due to new customs procedures and regulatory requirements, affecting supply chains and ultimately impacting consumer prices. Then there was the post-Brexit implementation and the COVID-19 pandemic that was 2020 to 23. The UK's formal exit from the EU Single Market and Customs Union in January 2020 brought about a new set of challenges. Businesses grappled with the complexities of new trade agreements and adapted to the imposition of tariffs and non-tariff barriers. Supply chain disruptions intensified, leading to shortages of goods, increased costs, and delays for businesses and consumers. These challenges were further compounded by the outbreak of the COVID-19 pandemic in 2020, which triggered a severe economic downturn and exacerbated existing labor market shortages. Overall, economic performance is Yeah, let's say despite the challenges posed by Brexit and the COVID-19 pandemic, the UK economy has still demonstrated resilience, showcasing its ability to adapt and recover to some point. GDP growth has rebounded in recent years and unemployment has remained relatively low, but the long-term economic impact of Brexit remains uncertain, and the UK economy faces ongoing challenges, including Brexit labour market shortages, higher inflation than anywhere else because of Brexit, and the lingering effects of the pandemic. While Brexit has undoubtedly brought about significant challenges, it has opened up some potential opportunities for the UK economy in their view. They say they have greater autonomy over their trade policy and regulatory framework, and with that they could pursue new trade agreements and tailor regulations to its specific needs. And additionally, the UK could benefit from a more diversified economy, reducing its reliance on EU exports and expanding into new markets, but we haven't seen that yet. So they have undergone a period of significant change and uncertainty since the 2016 referendum, and while the immediate impact was negative, they, for some point, could fight the effects a little bit, but the UK would be much better off if they have stayed. But the opportunities they were always talking about were not there, and they need to address far more challenges that lie ahead. But the Conservative government's approach to Brexit and the subsequent implementation have been widely criticised for contributing to economic challenges in the UK. And there are some key mistakes that have been identified. One was underestimating the complexity of Brexit. The government's initial assessment of the complexity of Brexit was quite underestimated, leading to unpreparedness for the challenges that arise. And this unpreparedness contributed to supply chain disruptions, trade barriers, and regulatory hurdles that hindered businesses and impacted economic growth even. Then there was the poor negotiation strategy. The government's negotiation strategy with the EU was criticized for being inflexible and lacking a clear vision for the UK's future relationship with the EU. And this led to protracted negotiations, increased uncertainty, and ultimately a less favorable outcome for the UK economy, to be honest. And there was a failure to address the labour shortages. The government's reliance on restrictive immigration policies and its slow response to the labour market shortages caused by Brexit have contributed to skill shortages and gaps in key sectors, further hindering economic growth and productivity. And there was inadequate support for businesses. The government's support for businesses during the Brexit transition period was deemed insufficient, particularly for those in sectors heavily reliant on EU trade and labour. And this lack of support exacerbated the challenges faced by businesses and contributed to economic uncertainty. And there was over-reliance on austerity measures. The government's continued focus on austerity measures, even in the face of economic challenges, has limited its ability to invest in infrastructure, education, and other critical areas that could have supported long-term economic growth. And of course, there was the mismanagement of public funds. Several high-profile scandals involving the misallocation or wasteful use of public funds have raised concerns about the government's financial stewardship and its ability to manage taxpayer resources effectively. And there was their inadequate preparation for the COVID-19 pandemic. The government's handling of the COVID-19 pandemic has also drawn criticism, with allegations of slow decision-making, inadequate testing and tracing systems, and a lack of transparency in procurement processes. These shortcomings have compounded the economic challenges faced by the UK. And these mistakes have had a significant impact on the UK economy, contributing to slower growth, increased inflation, and a decline in living standards for many households. The long-term effects of these missteps are still unfolding, and it will take time to fully assess the full extent of the economic damage caused by the government's approach to Brexit and its subsequent management of the economy. The long-term outlook for the UK economy with regard to Brexit remains uncertain and complex, with a range of potential outcomes depending on various factors, including the UK's ability to adapt to the new post-Brexit landscape, to capitalize on what they see as potential opportunities, and address the challenges that lie ahead. The UK's exit from the EU single market and customs union has led to increased trade barriers and costs, which will reduce trade with the EU, and that's a significant trading partner for the UK. And this will impact businesses, particularly those in sectors that rely heavily on EU trade, and will in the end even lead to job losses and economic slowdown there. The free movement of people between the UK and the EU has ended, making it more difficult for businesses to recruit workers from the EU. And this has led to labor shortages in various sectors, particularly in industries that rely heavily on EU migrant workers, such as agriculture, hospitality, and healthcare. And these shortages hamper economic growth and even productivity. Yes, the UK has gained greater autonomy over its regulatory framework, but this also means navigating complex new regulations and adapting to the divergence from EU standards and the consequences. And this uncertainty discourages investment and makes it more difficult for businesses to operate efficiently. And the UK, of course, has the freedom to negotiate trade agreements with other countries around the world, but so far they got much worse deals than the EU did. And this also is not the best they could do. And yes, the UK has the ability to tailor its regulations to specific needs, potentially reducing regulatory burdens for businesses, encouraging innovation inside the country. But if they still want to trade with the EU, they have to match their regulations when exporting. So, and the whole migration issue, and I will come back to Suella Braverman very soon again, as you can imagine after what happened in recent days, that will not all be those shining lands that they were painting. And all the policies we've seen so far are not very successful, and there's a lot of infighting in the current government. That's why Suella Braverman still has a job. And that will not be any good for the country as a whole. And the long-term economic impact of Brexit, we can't even say that because there's still a lot of transition periods. And they will experience more negative consequences from Brexit in the years to come. The extent to which they will be depends on the government, will depend if there's a new government next year, and how that new government would deal with Brexit. But whatever we heard so far is not making me very optimistic, I'm sorry to say. But if you want to know something else, the next video is right here in the end screen. I'll see you there. I'll be back.